Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra with me, Shell Bhatnagar, and this is Market Today, a show where we'll help you understand the closing action on the D Street. Well, it's not really looking good as we are closing in on the weekend now. The markets have further slipped lower in trade. When we look at the Nifty, it's now trading at around 23,700. There's an over 1% kind of a cut that we are seeing on the markets right now. When we look at all the sectors on the markets, mostly all of them have also slipped into the red. The Nifty Bank down by 1.3%, autos down by 1.4%, over 1% cuts for financial services as well. IT index, look at the kind of fall that we've seen, over 2.5% kind of fall. Look at the metals, 0.5% of a cut for this one. PSU banks are nearly down 2%. Real estate sector is down 2.4% as well. That's the kind of fall that we are seeing across the board. Even the broader markets now are not supporting the market sentiments. All the sectors down into the red, and deeper cuts being seen across the board as well. So it's panned out to be a weaker day yet again. Very, very volatile in the startup, and now we are inching closer to the day's low point as well. We've also tested the 23,700 mark now, 255 points lower. It's an over 867 points of a cut for the Sensex as well. So sharp losses being seen across the board. Shell.
So ladies and gentlemen, we've just tested the 200-day DMA on the Nifty, and if you total the losses that the Nifty and the Sensex and the Bank Nifty have made in this terrible week, which should end fairly shortly, it's quite a number, and it's pretty worrisome. I'll request the PCR to kindly show us the long-term chart of the Nifty, and there you will see sustained selling pressure. This is now primarily because of the actions of the US Fed, and more importantly, subsequent those actions, the jump in the US 10-year bond yield, the jump in the dollar index. So when you look at the performance of the Nifty over this week, it's down 4.34%. The Nifty Bank is down 5%, and the Nifty the Sensex is down 4.6%. They have exceeded the fall that we've seen on the Dow Jones, Nasdaq, and the S&P 500. So the problem is somewhere else, but we are paying the major price because of relative overvaluation that the Indian market has, and of course the expectations that third quarter will be worse than second quarter. Why expectations? Those are fears. And that is why you see this sustained selling pressure, 23,688 now. The IT index is down 1,000 points, ladies and gentlemen, and that is indeed something that is more worrisome. Whenever an index rises sharply, as the IT index did on 3rd of June, as the index did on 7th of November, or at the beginning of this rally which started on 5th of June, a similar fall of a similar percentage signals the end of a pause in the preceding move. So this is something that is worrisome. Be that as it may, we have to live with the bad and the good. The early morning gain on the Nifty IT index was substantial. It had hit a high of 45,650, and from then on to now, it's almost a collapse of 2,000 points on the Nifty IT index as well. We have an issue as far as the markets are concerned. Let's see what goes on. But what is good is just 2 or 3 spaces. One of them, government insurance companies, GIC Ray, for a change hitting a record high, and if you look at the volume on GIC Ray, it's substantial. So far almost 1400 crores have been traded, and that's very good. So actually profit booking is also happening in recently listed counters. Look at MobiKwik, now down 12.5%, 474. Look at Swiggy, down 1.77%. Look at how money is moving out of counters such as Vishal Mega Mart down 3% at 101. So across the board, there is either profit booking or short sales, and thankfully, Saturday and Sunday will be a day of rest. And let's hope we close the week with these losses and start on Monday with a fresh note.
Absolutely. Let's also welcome our guest on board then to understand what do we expect in the markets from here on. Kush Godasara, market expert, is now with us. Kush, I'm sure you must be smiling away. You had predicted sharper downticks on the Nifty. Has your target been achieved? Have you also come out with fresh lower targets on the Nifty now?
Good afternoon. Definitely, first target of 23,200 is still active. I mean, if we breach that level, we may see more downside around 22,000. But on positional basis, definitely weekly charts are looking weak. So yes, now we can, be at least be ready for 23,200 because we are trading below 200 average again. So that is a worrisome. And secondly, all the stocks, I mean, all the sectors, even IT sector, which was giving us support, is also cracking down. So definitely scenario looks pretty much weak. I believe 23,200 and below which we may see 22,000. 23,200 below which 22,000. On the upside, 24,300 is a strong resistance and which can act as a stop loss.
Let's take a detour into the markets and look at anything that is ticking in the green and has heavy volumes. We'll focus on GIC Ray and NIACL. This is ahead of the December 21st meeting that is going to be held with the group of ministers in the GST Council. A lot of talk and a lot of expectation that the GST, which is applied on non-life, life and medical insurance, will either be reduced dramatically or given away altogether. But for the moment, look at how SBI Life is moving, look at how NIACL and GIC Ray are up to, and of course the strong show that you see in the pharma space. Dr. Reddy's 2.5% higher. Look at the move on Divi's Lab. There is strength coming into our old favorites, Aurobindo Pharma, Glenmark and of course Lupin. So that is one space which is still away from profit booking, but so far it's not turning out to be a day that you would want to remember. In fact, a week that you'd rather forget. Sakshi.
Absolutely. Kush, long or short side, where are you really looking at stocks at this point?
Definitely, IT stocks are looking weak. So one of first call for a trading perspective is from IT stock HCL Tech. I believe HCL Tech is a good candidate to short positionally. Maybe we can short Gen series. On the upside, stop loss would be around 1960, while the downside target are open for 1780. So if at all someone is looking to take fresh entry in Gen series, HCL Tech is my first counter. Second is Indigo. I believe Indigo has not corrected much in last 3 days, but retrenchment of exactly 50% of the last fall has been completed. So with the stop loss of 44.60, you can short Indigo for the target of 4200.
Okay, got that. So those are the two short candidates at this point in time. Let's look at the broader markets and see where the momentum is coming. Insurance companies already highlighted by Shell, where there is momentum on GIC and New India Assurance, but Aegis Logistics is also up by about 7.3%. Then you have Newgen Software, that's also nearly up 4%. Five-Star Business Finance is where momentum on the positive side can be seen, 3.8% higher. KEC International is up by about 3.5%. BASF India we had marked in the morning because of the news flow of demerging its agro-business, and therefore you are seeing some momentum on that side. Even on the 52-week high front, we have several other stocks like CRISIL, for instance, is hovering at its 52-week high. KFin Tech is hovering at its 52-week high as well. GE and TND was marked in the morning by Shell also. KPR Mill is another one that's also buzzing in trade on the higher side right there. Kush, any comfort within the broader markets where the momentum is continuing despite such heavy sell-offs being seen across the board in trade today?
Maybe stocks like K Fintech uh, are looking good to me. I mean, K Fintech is also making fresh highs. So maybe KPR Mill. I don't think I'm comfortable at current levels, but definitely two stocks are on my radar on the long side where you can hedge your shorts. K Fintech with the stop loss of 1410, which is 5-day average, and on the upside we may see 1600. And second stock from is BF Utilities. I mean, this stock has a little bit lower volumes, but definitely chart patterns are strong support on the downside around 970 are strong. So with the stop loss of 970, even BF Utility can be bought for the upside target of 1120.
Okay, that's a how should I say, sticking your neck out on the buy side at a time when all crisis is breaking loose. Kush, can you look at the charts of SBI Life? The counter has corrected very sharply from 1900 to about 1425, and given the fact that there might be some positive development over the weekend on life insurance plays, what are the chances that you have seen the worst of SBI Life?
Definitely, you rightly pointed out. SBI Life is making some base, looking a little bit of positive. Uh, just we have a small hurdle at 1440, which is a 15-day average, and that has been acting as strong resistance since it has been falling from 1900 levels in September. So maybe one can wait for a confirmation. It's a good buy above 1440. Definitely not a candidate to short. If at all you have a short position since last two expiries, just cover it right away. Wait for a upside breakout, and we'll go along on SBI Life.
Okay. Well, Kush, apart from this, let's also focus on those which are actually hovering at 52-week low levels as well. Within the banking space, we have Credit Access Grameen, IndusInd Bank, then you have AU Small Finance Bank, Happiest Minds Technologies, Avenue Supermart, Aarti Industries. A lot of these stocks which are hitting 52-week lows as well, and their performance for some of them has also been dragging for the last 5 days. Most of them have fallen for last 5 days as well. Within the broader markets, Kush, how are you really looking at where there is absolute lack of momentum, be it heavyweight banking stocks, or be it some of the IT stocks in the mid-cap space as well? The confidence is just shaken. How should one be approaching such stocks?
So definitely as a short-term trade, in IT stocks, I'm definitely sure, unless you have bought it yesterday, otherwise you are in profits if you have bought it, say, a month ago also. So in IT stocks, for a short-term trader, I would suggest to book out profits. If you are even minor loss, just exit. On the downside, I think at least 5 to 7% correction, stock specific or IT sector, I believe we may witness. Definitely, there are good banking stocks. Yes, we have like ICICI Bank, which has not given such a fall today compared to Bank Nifty. But I believe there is some rotational profit booking going on. Today, SBI has taken a hit. 2 days back, it was HDFC Bank. I believe next it would be ICICI Bank. So I won't recommend to trade on the long side on banking stocks. So book profits on IT stocks and wait for a correction to invest for a long term.
Okay, let's look at some interesting data. Sakshi, for the last 5-7 days, all I have been talking about is this red thing that is there in the market, and I today thought, let me wear a red collared shirt and a red sweater along with this thick gold chain. I am hoping the bulls will see something bright and shiny. Kush, how do you like my new look?
I'm happy that you are on my side this time.
You mean to say on the short side?
Yes.
Okay, okay. I think, Sakshi, we've had enough of short moves now. From Monday, market will rise. Kush Babu,
Okay.
ये
Yes.
समझिए कि भारतीय बाजारों में जो दौर है वो कभी कभी बेयर्स का चलता है, लेकिन जो युग है और जो दिशा है वो सिर्फ बुल्स की होती है। अभी आप मज़े ले रहे हैं एक आध हफ्ते, कोई बात नहीं, लेकिन हमने बहुत साल मज़े लिए और बहुत साल मज़े लेंगे भी।
नहीं नहीं सर, लॉन्ग साइड भी मजे लिए, अभी शॉर्ट साइड भी मजे लेने चाहिए ना।
हाँ,
चलिए चलिए।
बिल्कुल।
एक और बहुत इंटरेस्टिंग डेवलपमेंट साक्षी, आई वॉच अ लॉट ऑफ स्टॉक्स विच आइदर ब्रेक or the monthly pivot on the long side, or break the monthly pivot on the short side. So monthly pivot is that a range where the average of the previous 1 month is calculated, and that has been broken by Tech Mahindra. 1693 is what the counter is at, and early morning the high was 1770. So the swing is of 70 plus 7, 77 rupees on Tech Mahindra, down about 3.5%. What are the charts of Tech Mahindra telling you,
Definitely,
Kush?
we Tech Mahindra had opened at a good note in the morning, but look at the pressure throughout the day, and the
Yes.
candle, it's just like a raspberry dolly. I mean, it's just a long candle. I believe this is maybe there is some fund action also, because generally we don't see such a movement sustaining throughout the day. Now almost we are 45 minutes away from the closing, and still stock is trading at the day's low and making a new low every 15 minutes. So definitely there is thing to worry. That is why I am targeting HCL Tech and TCS for the short candidates.
Okay. Let's see what else can we look at. Siemens is down by 9.5%. So several of the stocks which were actually on the up move before this week, they are all also largely giving up the kind of gains that they were looking at also. All the pockets are lower, especially the mid caps, Kush. 1150 points gone on the mid caps. How would you really look at this space particularly? I mean, mid caps and small caps were showing a lot of resilience over the last few weeks as well, and that seems to have been losing momentum now. How should one approach the mid and small caps?
Definitely, if you are directly invested into mid and small cap, I believe you should exit at one go and start, SIP in mid cap and small cap, because I believe, after a fall, it would be very difficult to pick out stocks which will, turn around first. So, best strategy as of now for short term could be, you exit direct delivery in equity in small cap. And of course, you can hold on to good quality mid caps, but otherwise, you just exit, book profits, and start your SIP in mutual funds through small cap funds or mid cap funds. I believe that would be a best strategy as an investor. As a trading perspective, if you're a risk taker, stocks like Coforge, InfoEdge, which are high beta, uh, there can be a good trade for a short side.
Okay, let's try and trouble Kush with the stocks that are going to definitely probably show you better days in the in the days ahead. Kush, how about Divi's Labs? What are the charts of Divi's telling you? And what is your view on Dr. Reddy's? These two are, of course, defensive counters. One a part of Nifty, one that was a part of Nifty. Any views on Divi's and Dr. Reddy's?
Definitely, pharma index as a whole, I feel, after consolidating out, we may see some good buying. Dr. Reddy has already seen a good momentum in last 3 days from the lows of 1260. So maybe I will keep holding Dr. Reddy's if I have bought it, with the trailing stop loss at 1330, for the short term targets at 1400. While DV Slab, we can freshly buy in and hedge our short positions with DV Slab, because it's in the future. So stop loss on the downside can be around 5800, while the target on the upside can be 6400. So definitely, pharma as a defensive could play out a good play next week.
Okay, got that. So that's as far as the pharma space is concerned. Kush, you would also remember that before these last 3 4 days of a sell-off, it was the railways and the defense space that were outperforming and seeing a lot of pre-positioning ahead of budget. I mean, we were discussing this earlier also. Stocks like RBNL, IRFC, even the wagon makers Titagar, JWL, they were making a comeback as well. For defense space, a lot of momentum was being generated in Cochin, JRSC, Mazicon Dock, for instance, as well. They also opened higher in trade today as well. Do you think these dips could be fair entry point into these stocks if one has to look for preparing the portfolios ahead of budget?
Yes, maybe we can buy ahead of budget, but not now. I believe there is a fresh sell-off initiating on all these stocks. On the downside, still one move, 10% or at least 15% lower is expected in all these railway-related stocks. So definitely, I will keep a watch on them for January month. I mean, after maybe mid-Jan, we can start approaching these charts and buying at lower levels. But as of now, not in near term. I will just, stay away.
Okay, 254. So 6 plus 30, 36 minutes left as far as prices are concerned for Friday as well as this week. Sakshi, you have no idea how desperately I'm waiting for this week to end. For the last 5 days, actually, Friday starting, we've had such a painful time in the market, hoping कि 20 DA में रुक जाएगा, 50 DA में रुक जाएगा, अब 200 DA में पैर वापस बाइंग आ जाएगी. लेकिन US 10-year bond yield, dollar index, and of course then the subsequent sell-off in the US markets has put all hopes to now absolute rest. You've marked AG's Logistics 8.4% higher, 819.35. Let me show you some very good data. Okay, look at Pratap Snacks, a very well-known PMS fund has purchased about 3,65,000 shares. This is in the name of Diamond DYD. This was probably a company that they had purchased and merged the Pratap Snacks business in there. Okay, there is MTAR Tech, up 6.5%. There is another company called Salzer Electronics. I had marked this in the morning as well. 1582, 8.2% higher. And in the ready to wear clothing, you have Thomas Scott, 5% higher. This is a circuit, 454. And of course, what else can I mark? BGR Energy. At some one point of time we used to track this counter, 5.5% higher at 85.16. What are you watching, Sakshi?
Well, Shell, it's a very painful market across the board. You know, stocks like SBI, Amber Enterprises. You look at it, the kind of fall that we are seeing. I was talking about Siemens. That's the top loser in FNO as well. You have RBL Bank, ABB India. The entire space is actually weakening in trade. There are very few stocks, and most of them we have also marked since morning, that are seeing some strength in trade. You know, stocks like even PFC, that's down by about 4.5% odd, which we were talking the previous week as well. Kush, you'd remember that we were focusing back on the power space, and the power financiers are also doing well. Again, will it be an opportunity to buy into the dip?
Maybe we still wait and watch. Maybe not at a current dip. Still, I believe PFC would test 420 as discussed. So still wait. Now, looking maybe market. Last time we didn't have a confirmation, but today we have confirmation that yes, definitely we are seeing some more downside.
Yeah. Even stocks within the
Well,
solar and renewable energy space, Vari Energies, for instance, that's also fallen. There are so many stocks that are actually giving up some of the gains that they had just built up over the last week. Shell, what else are you keeping an eye out on?
the clock, Sakshi. I'm waiting it to strike 3:30.
So let's have a special session tomorrow.
Yeah, what are you saying, Kush? You're pulling my leg.
No, sir, we are on the short side. So we would expect a special session by NSE tomorrow.
Ah, ठीक है. You want a late session till 6 p.m. and you want the markets to open on Saturday, Sunday also, right?
That would be good. So
अरे
we can,
बाप रे.
we'll buy,
Okay. चलिए
buy फिर
with those
वापस
font. हाँ, tell me.
लोअर लेवल पे वापस
Tell me,
बाय
tell me.
करेंगे. लोअर लेवल्स पे बाय करेंगे.
ठीक है सर. बिल्कुल. That's the way how traders live. They take and enjoy momentum on both sides of the trade. Thank you so much, Kush, and have a nice weekend. You can also sort of trade on paper and do paper trades and enjoy the weekend as well. Have a good time, and congratulations on the profit that you are making.
Thank you, sir. I hope our viewers have made profit. That would be more make us happy more.
Yes.
Yeah, absolutely. We will just check the commentary that is coming in the YouTube and let us see whether they hate you or they hate me. One of them has to prove to be right. But for the moment, have a nice weekend. And in the same breath, we are welcoming. Yeah, you're saying something, Kush?
Yeah, there should be always be a debate on the both the sides, so viewers can get best out of it.
Absolutely. It is your time. I agree with you. Please enjoy this moment under the sun.
Yeah, Chole Bhature are still pending, sir.
Yes, of course. There is a gentleman who's written to us, Kush Pratik Khare from Madhya Pradesh, and his question is that I am buying PNB Jan futures at 106.3. I think he's already purchased it, and he's now asking कि अब मैं क्या करूं?
Well, maybe give a strict stop loss at yesterday's low. Still, PNB has not breached yesterday's low, so that could be a strict stop loss.
Okay. So I hope Pratik, you've heard it. Just keep a stop loss below Thursday's low, and you will be safe if the market takes you out, or maybe that stop loss will keep your profits in check. Okay. Just the right time to welcome Mr. Amit Goel, co-founder and chief global strategist at Pace 360. This is a very well-known PMS which is run out of Delhi. Namaste, Amit ji. A very warm welcome. And a welcome at a time when all hell is breaking loose on Dalal Street. You had gone long with all chestnuts and fire. Now, what do you think is happening? I think what we'll do is we'll wait for Amit to mic up. Ji. I think Amit is there. Yeah, hi Amit. So you grew this beard in the hopes that मालिक कब सब आएगी? Can you hear us, Amit?
I can hear you, Shell.
Okay, I was just saying that you grew a beard in the hope of making supernormal profits from the long side, and shifted a large part of Pace 360's money into equities, and here we are facing this slide. Now what will you do? I have also worn this gold chain in the hope that bulls will get attracted on Dalal Street, but I think it's turning out to be a fruitless exercise.
No, absolutely, Shell. So I guess around around 5th and 6th, I was only able to trim the beard. I should have actually shaved off the entire beard, I guess. So we did a bit of churning around that time, but what has happened in the last 2 days is actually in some ways unprecedented, particularly in the last all of us have got used to this market behaving in a certain fashion, and what has happened in the last 2 days particularly, but I think broadly since the beginning of last week. So I think these 2 weeks have been one of the worst fortnights that I have witnessed in quite some time, and the despondency in the market is actually at extreme levels. Yeah.
Amitji, good afternoon. Good to have you with us. Well, just like how rightly Shell pointed out, this is a time when there is extreme volatility in the markets. When we were contrarily expecting a Santa rally to begin and cheer all of us up, it's been probably the US Fed's comments that have not been taken well by the markets. Do tell us broadly, how are you really looking at Indian markets vis-a-vis the context that is getting generated from the mother market US as well? Macros, policy shapes, how these things will now matter for the market momentum going forward from here. Do you think it is going to get a lot more tougher for investors to make money in the markets that are going to be taking shape over the next few months?
So what I can safely say is that we are probably close to the worst point. Very difficult to say, when you are sliding by 300 points a day on Nifty, and mid cap, small cap indices are going down by 1.5% in a day, then it would be very difficult for anybody to really put a finger and say that, okay, this is the precise bottom. But my sense is that considering the kind of despondency which exists today, considering a near capitulation scenario that we have seen unfolding in front of our eyes in the last few days. So while Fed was definitely, it was a very, very disappointing Fed policy for emerging markets and even for US markets, which have gone down substantially in the last 2 days. But I think particularly for emerging markets, because they have now got hit from all sides. On one hand, US equities are going down. Second, dollar index is obviously at a very, very high level, close to a 2-year high on dollar index. And US bond yields have climbed a lot. So this is the perfect backdrop for bears, and probably the worst possible backdrop for the bulls from an Indian standpoint. But my sense is that considering the kind of capitulation, considering the kind of despondency and the mood prevailing in the market, my sense is that we are very close to a bottom. But since we started speaking, Nifty has gone down by another 50, 60 odd points. So I think baby is being thrown with the bathwater. This may carry on for another 100 points, 150, 200 points. But I can assure you that it all is not lost. And at some point, the markets are going to turn around, and the turnaround is going to happen very soon. In fact, we are going to be issuing a macro report within the next 1 to 2 days, which talks about the previous post-election scenarios when dollar index went up quite a lot. And seasonally, we are now at a point where dollar should stop climbing. So dollar should stop going up over the next few days. Bond yields should probably find a home for themselves and not keep going up anymore in US. And considering the mood, the capitulation, we are very, very close to a bottom. So I'm still an optimist, and I still feel that by January end, the market is going to be substantially higher than where it is today. But very difficult to say whether the bottom has been hit today or it's going to be hit over the next 1, 2, 3 days. I think between now and Thursday, if one has a potential to buy, then one can stagger one's buying between now and Thursday, which means just 3 more working days, Christmas being a holiday. And I think probability is more than 90% that you would make a gain of at least 6 to 7% by the end of January if you were to acquire a diversified portfolio.
Okay, ladies and gentlemen, Amit, this is a relief to hear that you see this fall bottoming out at the current levels. I'd just like to understand a couple of things. When we last engaged, you had mentioned that a large chunk of your money had moved into Indian equities. You just mentioned a bit a moment ago that you had churned some stocks on
Yes.
4th and 5th of December. The two picks that you had discussed was IGL and of course BPCL. Now, what is the status of the portfolio? Have you trimmed equities or have you gone deeper into equities taking advantage of this fall?
So our overall exposure has not come down at all, Shell. And we are, in terms of exposure, we are pretty much where we were in early December. But we've done some churning because some of the stocks which are typically high beta stocks, like the real estate stocks and stocks like Raymond, for example, and even IGL to some extent. So some of the stocks had gone up substantially, and so we just sort of, we thought that we would probably reduce the beta of the portfolio by selling some of the more volatile stocks and then getting into somewhat more stable stocks. So we've done a bit of churning in the last 2 weeks. But in terms of the overall equity exposure, it is pretty much the same picture as it was when we last spoke, which was about 2 weeks back.
Right. Now 1500 points of a cut on the mid caps. The Nifty Bank is 800 points down in trade, viewers. That's the kind of fall that we are looking at into the markets. Sharp lows being seen. Especially on the mid and the small caps, the broader markets. What is your sense, Amit? How are you really looking at these two spaces? They were showing some resilience in the last few months, last few weeks. Do you think that will come back, or will this space have further some more deeper correction to go?
My sense is that even in the small cap and mid cap space, we are probably not too far away from a bottom, because it's very difficult to envision a situation where the large caps will recover, but the small caps will not. And
Okay.
in any case, this market, even in the next few weeks, is probably going to be driven more by domestic money than by foreign flows. And in which case, obviously, small cap and mid caps are at least going to perform as well as the large caps, if not outperform. So my sense is that we are very, very close to a bottom, and one cannot completely rule out the possibility that we go down and we retest the November lows, which were made on November of 21st in Nifty. And one cannot rule that out. We could probably go down to that level. Maybe we could even go a little bit below those levels. But I'm pretty confident that we are very, very close to a bottom, and anybody who buys over the next few days is, in hindsight, going to be a very, very wise investor. But of course, all of us who bought previously, we have mark to market losses on our diversified portfolio. Some stocks would probably still be in the green, but I think a majority of the stocks would be in the red compared to the prices at which we bought them. But my sense is, I mean, when I look at my portfolio, we are actually much better off than we were on 21st of November, while Nifty is just about 1% higher than those levels. But my portfolio is, compared to that point, we are up about 6% even as we speak. So my sense is that good quality stocks are going to come back, and they are faring somewhat better compared to what they were doing in the third week of November. So I think low P stocks, fundamentally good stocks with good earning yields, and which are not too rate sensitive. So at this point, one needs to be a little cautious on the rate sensitive. So whether it is the capital goods sector or it is the real estate sector, we took a lot of money off the table from our capital goods and real estate and infrastructure kind of stocks, because we were just not feeling comfortable with the US dollar index and the US rate scenario which was unfolding. So my sense is that some of those sectors will probably not do as well as some of the others. So my focus right now is on more of cash cows, great earning yields, reasonably good dividend yields, reasonably good earning visibility, not very highly leveraged, not too high on beta, and not too rate sensitive. So I think this particular category of stocks will definitely come back. And if Nifty were to go back to about 25,000 odd levels, my sense is that a portfolio which satisfies these conditions is probably going to outperform by at least about 3 odd percent. So if Nifty goes up by 5% from here, I think this kind of a diversified portfolio will probably go by about 8 to 9% from here.
Right. So a 50% higher return from whatever the move that is there on the Nifty. Amit, you've screened maybe 4 or 5 touch points where you would want your potential buys to click the boxes. Maybe 4 or 5 names that you can share. My gut feel is that many of these stocks will be from the point of view of the PSU basket.
That is right. So PSU basket does figure in our portfolio pretty prominently. So we are still bullish on oil marketing companies, and it's quite surprising that today the oil marketing companies are down when today you have a better visibility on the under recoveries from LPG. But I guess the sentiment is so bad today that market doesn't even want to look at any positive news, if at all, from any sector. So we are still heavy on PSUs, not so much on PSU banks, because again, that part of the portfolio was doing well and we wanted to reduce our weightage to rate sensitive. So we also reduced some of our weightage to the PSU banks and some of the even private banks where the run up was pretty strong. But even today, our portfolio would have a lot of PSUs. We would have BPCL, we would have IOC. We have, in the last few days, we've also picked up a reasonably good chunk of Reliance Industries. We switched our Tata Motors into Bajaj Auto and Maruti because we just felt that Tata Motors is, as a stock, not looking that great to us. There are a lot of headwinds for Tata Motors. So we have a bit of Maruti, we have some Bajaj Auto. So it's a very traditional kind of portfolio. It doesn't have much representation from the IT side or the FMCG side, hardly anything from the pharma side. But we are reasonably heavy on the PSUs. We are reasonably heavy on the oil marketing companies. We've now picked up some stock in Reliance Industries. We've got Bajaj Auto. We've got Maruti, and so on and so forth. So it would have about I think 35 different scripts as of now. And we even have MGL. So we sold out IGL at higher prices considering the bonus news. And then we have picked up MGL over the last few days, Mahanagar Gas. So my sense is that we are well positioned for the next few weeks. It's a relatively conservative portfolio. So if the market were to go down by another 1 to 2%, which cannot be ruled out at this stage, probably we are going to fare well than an average portfolio. And if the market were to go up, then I think we are going to outperform Nifty. So this is how we have constructed the portfolio. And my understanding from dollar index, US bond yields, and US equity markets and the global macros, I still am not in the camp which thinks that the tops have already happened. I still feel that some of the markets will actually make new highs. Some of the markets will only give relief rallies and not make new all-time highs. But overall, between now and January end, I think it looks like a pretty sanguine period for equities. And I think the next quarterly results are going to be better than the results which came in October and November. Seasonally, this quarter has been, seasonally, this quarter is always better than the previous one. But this time around, I think it has been somewhat better because the previous quarter was just a completely an underwhelming quarter. So I think January end is when we penciled in for a possible partial exit from the portfolio.
Okay, got that. I also wanted to ask you, you haven't mentioned clearly as to what is your position as far as the new age tech space is concerned. Then, I mean, where would you keep the likes of Zomato, Swiggy, maybe a Paytm, PB FinTech also, as a perspective for the new year? These were the spaces that have garnered a lot of investors' attention this year thus far. Do you think they still are worth it to be bought at despite the kind of rallies we have seen on these spaces?
See, my sense is that these stocks were and probably still are in a bit of sweet spot. Of course, they have come down with the rest of the market in the last 6 7 days, but that is not a good enough sample for me to suggest that their outperformance has come to an end. So, but frankly, they do not figure in my portfolio because of the fact that I do not have valuation comfort there. I believe my margin of safety, in case the market were to go worse in the near term than what I am expecting, I do not want to be left holding some of these stocks at the astronomical valuations that they are trading at. So I feel safe with the portfolio which I have built over the last, let's say, about 7 8 weeks, and I'm not buying any one of these stocks. But in case, as the market goes down in the next few days, and if they were to go down even faster, maybe I might tactically buy some of them, because I am absolutely convinced that between coming Thursday and January end, we are looking at a pretty sizable rally. This is not this beer hammering. I mean, this hammering that the market has got in the last few weeks, it is suggestive of the fact that the sentiment that we had in September end is not going to come back in a hurry. And I'm not looking at new lifetime highs in Nifty anytime soon. But I think tactically, we are looking at a reasonably good rally from this month end till January end. And tactically, I might end up picking some of these stocks, but it is going to be a tactical call. It is not going to be a strategic call, and I would sort of be comfortable picking them up when I'm absolutely convinced that my downside on the market and consequently downside on them is literally down to like 1% 2%. And I know that if the market recovers, they are probably going to recover at double the speed. So if the market goes up by 5%, these stocks are probably going up by 10 to 12%. So they will give me a higher alpha. Because they have a higher beta, they will give me a higher alpha when the market recovers. And I am pretty confident that we are getting very, very close to a bottom, guys.
Yes, and probably today's capitulation day as far as Indian markets are concerned, ladies and gentlemen. The volumes are unbelievable, and this possibly could be a time when the peak of selling is over. Zomato has traded 5,727 crores. ICICI Bank is in the green. Please note what I am saying. ICICI Bank is in the green, marginally so. 5,650 crores have been traded. Reliance down 2%, 2,180 crores. You have JSW Steel down 1% and about 1,959 crores. In fact, if you look at the top 12 counters on NSE 500 in terms of volume, actually why top 12? Look at top 20. More than 1,100 crores have been traded in each of them. And these are sure signs of capitulation. Look at GIC Ray. Sakshi, a lot of stocks are showing a very, very strong bounce back, 16% higher and record volume of 1983 crores. Look at JWL, look at Titagarh Wagons, look at Bharat Dynamics. All of them are at their day's high. Look at how positioning is happening in HDFC Life. Days high ahead of that meeting of the group of ministers. Raymond 1749, 2.8% higher. Maharashtra Bank 5% higher, 55.78. Central Bank in the green, 1% higher. So there is full chance, ladies and gentlemen, that the peak of FII selling has been seen today. Let's hope for the best. That will come from Monday onwards. This is, as Amit was just pointing out, the maximum pessimism that he has seen in many weeks, and lot of people have been contacting us as to what is going to happen, how it is. These are all sure signs of panic abating and selling peaking. Amit, when was the last time you saw such value volume? Now ICICI Bank 6,000 crores, Zomato 6,118 crores. So Sakshi, this is what the thread is in the market in terms of selling pressure, and let's hope that the worst is behind us. 23,600 for you on the Nifty.
Yes, Shell. In fact, a lot of people have already started to comment on social media that this perhaps is the biggest Black Friday sale that we are seeing in the stock markets right now. And the moment that you pointed out that a lot of volumes are being seen on the buying side, probably investors are taking benefit of that for the long term in this kind of a sale that is taking place in the markets. But as things progress, this could still be the biggest weekly loss for the markets in the last 2 years. For this week, the BSE listed companies have erased nearly 17,000 crore rupees of market cap, and 70 lakh crore rupees of market cap. And what we've also seen is that for this week alone, 48 of the 50 Nifty stocks have logged in losses. About 30 of them have slipped 5% in this week as well. And, only probably Dr. Reddy's and Cipla from the pharma pack have recorded gains this week. So seems like, this has been a very painful week, and the way we have been seen. But just like how you pointed out, and Amit also said the same, that this seems to be the worst that we could see, and we are very near to the bottom probably, and things should look up from here on as well. Remember, again, tomorrow there will be one more trigger. Even though it's a weekend, we will react to the 55th GST Council meeting outcome on Monday as well. So that will be the next key trigger that the markets will be also reacting to. Remember, we've been already reading out a lot of reports, unconfirmed ones, which are coming in, that probably ATF could be included under GST. There could be taxes on the used cars, on EVs, old vehicles as well. So those kind of things could be discussed, and many such ready-made garments, probably could cost more at about 28%. Those are the kind of statements that are coming in. Rate rationalization could take place. So those will be very important to track. We hope that things are not going to turn market sentiment sour. But so far, for this week, markets and the Nifty and the Sensex have fallen about 4% each. Biggest fall since June of 2022. Share.
Sakshi, we have been so used to getting thrashed around कि अगर Monday को भी गिरेगा तो कोई बात नहीं. But please mark my words when I say that despite such heavy volumes, the price cuts on the stocks are not much, which essentially means that the fall on a weekly basis may be more, but the fall today on very heavy volumes is not substantial. Therefore, you must note this. Look at ICICI Bank. In the last 3 minutes, 1,000 crores has been traded. Now the volume is 7,128 crores. On Zomato, the volume is 7,186 crores. GIC Ray, as Kush was saying, if this market goes on till maybe 4 p.m., we'll show you a 20%. But the thing is that the worst might be over, and maybe the index will go sideways, maybe it will fall another $100, but strong move coming in. Look at Thermax, days high at 4739. Look at Network 18, days high 75.53. Look at 361. This is also trading at days high. Very strong momentum coming back as far as the PSU pack is concerned. Again, Central Bank, GIC Ray, BDL, and of course the erstwhile favorites that were Texrail, Jupiter Wagons, and of course Titagad Wagons. So that's how the move is, and let's hope for the best, and let's hope that the worst is behind us in terms of sustained selling. Nothing gives me more heart than this very sharp move on ICICI Bank. Just let me mark the low of ICICI Bank and you will see what I am trying to point out. Okay, the low is 1272. We are at 1291. So with these rate cuts that are likely to come in on the GST side on Saturday, probably a fresh move will start, or most probably at least the selling will pause. Sakshi.
Absolutely. 3:28. Let's start wrapping up the market for this day and for the week. For the week, I've already shared with you Sensex and Nifty down by about 4%, the biggest weekly loss that we've seen in 2 years for the markets. 23,609 and thereabouts is what the Nifty could be really looking to shut shop at, 341 points lower. The Nifty Bank down by 1.4% at 50,839. Midcap index down 2.9% at 56,872. The small caps down by 2.2% at 18,706. Those are the kind of key indices that you've seen. Top losers on the Nifty are Tech Mahindra, IndusInd Bank, and M&M, all losing close to 4% each in terms of the biggest losers that we are looking at into the markets. Federal Bank, Bank of Baroda, PNB are some of the other banking losers that we've been seeing in the markets as well. SBI, AU, Small Finance Bank, Bandhan. Those are the kind of pockets that are lower in trade. Even Trent, Axis Bank, Adani Enterprises are some of the other losers in trade for the markets today. So sharp losses is what we have seen. IT index down by 2.5%. That's the kind of loss that we have seen on this one as well. When we look at the kind of stocks that we have to see on the mid-cap index, well, you will be, of course, looking to see how some of them are closing in very sharply lower in trade. Among sectors, are there any winners today? No, all of them have shut shop in the red. Starting with banks, autos, IT, financial services, pharma, metals, realty, all of them have lost ground in trade today. Very sharp losses have been seen across the board. On the markets, when we look at the broader markets as well, the losses have come in from a whole host of stocks like Torrent Power, 10% kind of a fall, Sundaram Finance, Mazagon Dock 6% lower, Emphasis, Fact, Paytm 5% lower, IDFC First Bank, CG Power. Those are the kind of losses that we're seeing in the broader markets particularly. What still held on is Bank of Maharashtra, like Shell pointed out, 4.5% higher. BDL, Apollo Tyres, Bharti Hexagon, Lupin and Petronet were some of the buzzers in trade. But we'll wrap it up at that, hoping that the next week will probably finally bring us the Christmas cheer. It will be the Christmas week. It will also be a truncated one. We will have a holiday also in between on 25th. That will be Christmas on Wednesday. But let's finally hope that Santa comes to town and does not paint the town red. We already have seen a lot of red, but definitely springs in that cheer that we've been waiting for. With that, we wrap up. Many thanks for joining in onto this edition of Market Today, and we hope, Shell, that your new look definitely finally attracts the bulls on the D Street next week onwards. So we insist that you continue to wear it for the next week too. Thank you so much for joining in, viewers, onto this one.
ఈ రోజు వారే డిమాండ్ చేసిండ్రు ఈ ఔటర్ రింగ్ రోడ్ అమ్మకం మీద మీరు విచారణ ఇయ్యండి అని. నేను మనస్ఫూర్తిగా వారు మనస్ఫూర్తిగా విచారణకి ఏదైతే అడిగినరో వెనకాల వారు కూడా చదువు వచ్చినా రాకపోయినా వారు కూడా వారికి మద్దతు పలికినందుకు వారు